You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Miax, one of the fastest options platforms in the world. Miax is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from the ever-exciting TheOptionsInsider.com, as well as, of course, from the network. And you guys can join us live every Friday, 1 p.m. Central, 2 p.m. Eastern, or after the fact. We don't judge on your platform of choice. However you listen, live after the fact, hit us up. Questions, comments, insights, pearls of wisdom. We do enjoy hearing from you guys. You guys always throw us those curveballs, which make the show so fun to do. And speaking of fun, we got some fun to break down, or maybe, I guess it's subjective, your view of fun this week. We got something to talk about, that's for sure. Let's get to it. We got a great crew to help me do just that. First off, let's go out to, I don't know if it's the local, if it's the international headquarters. Maybe he's at a fine dining establishment near you. We shall find out. He is a greasy meatball, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the program on this relatively quiet, relatively tranquil volatility week, sir.
Yeah, it's good to be here. Good to see how little volatility is doing. I got to say, this 11 VIX is getting old.
Yes, you know, it feels like back in the days of like 2017 again, right? Can't VIX get out of its own way? 9, foreseeable future. You know, what's going on? Volatility can't come back. It's one of those things. Of course, we're joking, listeners. It's been pretty much the polar opposite the entire week. And also joining us to help break that down, holding down the Miax hot seat today, we've got our old friend, Mr. Shelly Brown, the Executive Vice President over there at Miax Options. Shelly, welcome back to the Volatility Views program to you as well.
Can you hear me?
Uh-oh, he might be muted.
Can you hear me all?
We'll get Shelly back on. In the meantime,
get the operator, make a telephone call.
In the meantime, also joining us, also kind of pitching in, holding down the Miax hot seat as well, is our old friend making his quarterly or so appearance on the program, the Spikes father himself, Mr. Simon Ho, the CEO over there at T3 Index. Simon, welcome back to the program, sir. It has been too long.
Thank you for having me. I'm very grateful. Although it's not quarterly, mate. It's a bit more frequent than that. I enjoy being on.
let's call it every 2 months. How about that? Something along those lines.
Yeah.
Let's see. I'm going to keep on rolling into the volatility review while we figure out what the heck's going on with their friend Mr. Shelly, and we discuss a little bit of volatility.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, let's get to it. There is some vol on the tape this week. Things are popping off. Things are happening. Just a crazy, tumultuous week. It seemed like it started the week off kind of following a script that we've seen once or twice before. Some dramatic, some shocking political or trade war news sends the market into a spiral at the beginning of the week. Then we see a nice rally, and it seemed like everything was playing out as planned, and then additional aftershocks kicked in there. So on the heels of one of the biggest rallies we've seen of the year, we saw the worst sell-off of the year as kind of this 1, 2, 3 combo emerged of recession fears in Germany, weak economic data coming out of China, and of course the lingering malaise here in the U.S. with the Fed and the trade war and everything else. A lot going on a variety of different fronts. All of that kind of combining to send the markets into a tailspin yet again on Wednesday. Seemed like we were going to rally a little bit yesterday. Then it kind of ended up being one of those weird days. And then today it seems like the market may have a little bit of a firmer footing behind it. It knows where it wants to go. It knows what it wants to be today, as opposed to yesterday where it seemed like it was kind of all over the place. Today, most of the major indices firmly in the green. The Dow, the laggard, up a mere 1.1%. The S&P closing in on 1.5% to the upside. And the NASDAQ at about a 1.7% to the upside. And all of this green on the broad market screen means the vol indexes, for the most part, taking a bit of a break, a rare respite for this week. Not a lot of downside on the vol screens this week for the most part. Spikes holding firm at about a 1970 out there, off about 2.5 handles, are pretty close to it. And our old friend VIX Cash was at about an 1860 or so. Now it looks like 18.5 actually. Now it's back up to actually a little closer to our old friend Spikes at about an 1890 now. So that puts Spikes actually up a little bit from last week, up about a third of a point, and the VIX Cash down about 3/4, a little bit less than that now, about half a point from where it was last show. And of course, our old friend, the volatility of volatility, how could it be anything but up with all this volatility? So VVIX at about a 108.5, up 5 handles from where we were last week. And since he's making his biannual appearance on the program, we'll start with him. Simon, a whole heck of a lot has happened in the vol space since the last time you joined us on the program. So let's start there. Catch us up. What is on your radar? What's lighting up your tape in all this tumultuous volatility activity of the last, let's say, month or so, sir?
Well, I mean, there's a lot to talk about. I mean, this is pretty amazing. As you say, just a couple of years ago, we were sort of plumbing the depths of 9%. Nothing would ever make it move. Now we're getting, as you say, the polar opposite. So I think it's good from a volatility trading point of view. It is somewhat meandering, though. You know, as you say, you get some big rallies and some big sell-offs, and everything is very sensitive to news, it seems. So people have to be a bit hyper-vigilant at this point. So I think that's why you're seeing a sustained rise in both of the indices, the spikes and the VIX, simply because there is a great deal of uncertainty, and it's not exactly tracking in one direction. So it's quite a confusing sort of period. The other thing I guess I'd note is you mentioned the VVIX there. We have, as you know, we've got the V-Spikes, probably going to be publishing that at some point in the near future, and that has a premium of about 15 points over the VIX, and that's partly because of the construction. But yeah, in terms of the market, I think you're going to have to brace yourself. I mean, there's so much focus on this inversion of the interest rate market that happened earlier in the week. You have these tit-for-tat things from China, between China and the US on the trade front. So there's quite a lot of catalysts here for more volatility going forward.
Yeah, there's a catalyst or two, I think, to be found out there in the marketplace today. You mentioned the differing levels. I do want to get back to that in a second because that's been on the minds of a lot of our audience of late, and we're seeing it play out yet again today. But before we get to that, let's go out there to the Miax hot seat. I do believe we are once again joined by Mr. Shelly Brown. Shelly, are you there, sir?
I am. Thanks, Mark. Appreciate you having me join.
There he is. So, yeah, it's been a kind of a topsy-turvy week. We got some action in your neck of the woods. We're going to get to that in a little bit. But what's been coming across your radar as this week just been, I think topsy-turvy is underselling it at this point, sir.
It's just crazy. Certainly from my seat, things are running smoothly. But to watch this volatility and swings in the marketplace makes me wish I was back in the OEX again.
Slinging the old 1.5. Don't we all wish we were slinging the old 1.5 again? If you don't know what that is, listeners, look it up. Little history lesson from the early days of index options and index volatility. Mr. Meatball, your crazies in the pit chat, and you guys over there at Carmen Line must be having a field day these days. We're up, we're down, we're all over the place. Dogs and cats living together. Mass hysteria. What's been lighting up your tape, and what are the crazies in the pit chat? What are they up to? What are they slinging these days?
Yeah, I mean, I would say, like, we've been watching bonds, we've been watching gold. The vol there is insane. And, yeah, we've been watching the VIX flop around a lot. I would point out that VVIX and I'm certain the Viking are really not off very much right now, which tells you that despite kind of the rally here and the little bit of respite in the VIX itself, market makers do not seem to be buying that this is going to be a short-lived move. They're still no one's dumping upside calls into what the price action that we have today, which I think is kind of interesting.
Well, yeah, that's kind of been something we've been talking about for a while, right? There's never been a reluctance to fade this. We were even saying, earlier this week and late last week, it didn't seem like maybe there was a lot of smoke. Maybe there wasn't a lot of fire at the end of the day, at least from a vol perspective, and maybe that worm starting to turn. I think that 1-2 kind of punch coming out of Germany and China really spooked a lot of people. And then, of course, here we had the yield curve once again inverting, kind of the mother of all recession indicators. So that 1-2-3 punch really did seem to spook a lot of people. And you're right, all of a sudden we're seeing perhaps people leaning into this vol a little bit and not just taking it as an opportunity to fade yet another vol spike and dump all the upside they possibly can. Before we get into some of the other stuff we want to hit on with the levels, let's dive into those levels a little bit. Simon, I'm glad you're joining us today because it's even playing out as we speak right now. VIX cash at a little bit shy of 19 and the spikes at about a 1975 now. We've been getting a lot of questions from our audience. I've been kind of tabling them. We touched on them a bit. We talked about the dividend and things like that. But I figured since you are indeed the spikes father, this is your baby. It's a question best suited for you. I just grabbed a couple of them that we had tabled recently. We got a lot more. This one came from Chalk. He says, I'm still confused as to how the premium between VIX and spikes keeps changing. Simon also asking, maybe a friend of yours, Simon. No, I'm sorry. This is Anthor. He wrote it for Simon. He said, why does spike trade above VIX sometimes and below it on others, and so on and so forth? We've had a lot of questions about this. So Simon, we talked about dividends, price dragging, all that good stuff, but regale us. Why are we seeing this ebbing and flowing these days pretty dramatically right now in the spikes versus the VIX cash? Okay,
these two are very astute gentlemen, so I'm very glad for their questions. Just before we get into that, though, I just wanted to sort of finish off on your last thoughts with Meatball there. I think one thing that you haven't mentioned, which is actually probably playing a big part in this volatility staying persistently high, is prior to any moves, I wasn't on the last few weeks, obviously, but you must have been talking about the fact that there was a massive amount of VIX calls that were being bought. So I think what's happening here is the market is actually, the reason that it's not settling back down perhaps as fast as we may think when in the up days is because people are, it feels to me, structurally short upside. So that's probably one of the things that's contributing. So anyway, back to the question. So yes, thank you for these questions. So in essence, I guess the first thing that I will say is that just to remind everybody that the Spikes Index is one that is created using the same mathematical technique that is used for the VIX. It's basically just a variance swap formula. And what you do here is you sum the premiums, and it's done in a ratio of 1 over the strike. So it's it's very formulaic. Now, there are some differences between the two. One is that we are on the SPY as the underlying, not SPX. Now, why that matters is that the SPY is an American-style option, not a European-style option. And so, therefore, 4 times a year when the SPY ETF is pregnant with a dividend, the volatility can be slightly higher because there's an extra premium in there. So that will make that during those periods, at least prior to the payment of that dividend, you will see the VIX will track a little higher. It should be noted, though, that the macro statistics, the behavioral statistics of these two indices are virtually indistinguishable. So the correlation between the two is 99.98% or something, or 89%, something in that order. So these two things use the same methodology, except for there's a couple of exceptions here. One is that we truncate at a slightly different level. So, but ultimately, these two things track each other very closely. But you'll find that 4 times a year that happens. Now, one of the other folks talked about sort of movements between shorter time frames than quarters, and that can come about because we don't use weekly options either. That's the other sort of main difference. So in times where, say, the volatility curve is inverted or it's looking funny, there can be some differences there as well. But generally speaking, on a macro level, they're imperceptibly different, but from time to time, you will see some discrepancies.
I think you may have just coined one of my favorite phrases here on the network: pregnant with a dividend. I like that. That's a great way. It's a great way to view SPY. Yeah. It's going to alter my perception of SPY in many different ways going forward. It's pregnant with the dividend. I like that. Whenever people write to us on that inevitable quarterly dividend saying, why are my upside calls, cover calls, and SPY being called away? I'm right back and saying, SPY is pregnant with a dividend right now. So beware. But I like that. So hopefully, listeners, that kind of touches. We could obviously spend hours on that, but it is an interesting point, and one you guys have brought up quite a bit here on the show. Hopefully that answers your questions. Let's keep on rolling. I want to get to another point you brought up there in a second there, Simon. First, let's hit on these crazy beasts known as the VIX Futures come into Showtime. We said that cash was in the VIX land was at about an 1870 or so. We saw the front month future, about half a handle north of that, about 1920. And we saw that SEP future, so 2 months out, not quite a point, but close to it, almost a point exactly north of about 1965 or so. So maybe not quite as crazy, as tumultuous as we saw earlier in the week. Mr. Meatball, anything catching your eye out there in this ever interesting VIX curve this week, sir?
Yeah, I mean it's been pretty much inverted all in backwardation all week, and seems to really be holding that pretty firm here. It's really not it does not seem to want to give up that ghost at all. And Mark, at some point I want to go off on my interest rate diatribe, but maybe now's not the time. I think the VIX curve is really interesting in that August seems to be kind of fading the next couple of days, but SEP and October and November and December are all still really backward, and that's really one of the things I think is kind of driving volatility around. The market is not saying that we're in the all clear, but in any way, shape, or form. And that's why you're seeing relative strength out of the VIX, relative strength out of the VVIX.
Interest rate diatribe, eh? Who knows? Maybe we need a show called Rates Weekly, and then we can dive into all that. I think we have a listener question that may get into some of that a little bit later. So maybe there will be an opening for that if we have some time for the Vol voicemail a little bit later. We got to move on to some of the big trades that have been lighting it up this week. Shelly, I've joked with you in the past, I call it Super Tuesday in Spikes Land. I don't know why, but it seems like a lot of the flow tends to pop off on a Tuesday out there in that product. This week, we may have to change it, Shelly. We may have to call it Super Friday because you guys are lighting it up coming into Showtime. You want to regale us here with what's been going up in Spikes today, sir?
Absolutely. We had looks like a 1x2 swap trade today. The SEP 1725 call 1x2 for the AC 2030 1x2. that SEP, I don't know if it was opening or closing, but we had that SEP. Somebody had that SEP position on already. I don't know if they're adding or if it's that person rolling the, closing and rolling the position out to October. But that was the big trade today. There's been a couple other 1x2s, much smaller during the week, but this was certainly the big trade this week.
Yeah, Spikes is 1x2 land. It certainly has embraced that paper. It does seem, you're right, Shelly, it does seem, if I had to look at this right away, my first blush is this guy is rolling. He clearly rolled before from AUG, probably rolling out. I mean, the OI lines up exactly with the 5,000 and 10,000, changing the strikes a little bit like he did, I believe, last time, too. I think he changed his strikes from AUG to SEP, assuming, again, this is the same person, probably. 1x2 going up from the 17 strike to the 20 strike, and from on the upside, on the two-leg, from the 25 strike to the 30 strike, perhaps an indication of where we find ourselves in the volatility regime, going back to what Simon was saying earlier, maybe a little bit structurally different out there right now than it was when he first started initiating these 1x2s back in August now. I don't know, Shelly, I don't know if Super Friday has the same ring to it as Super Tuesday, though. What do you think?
To be perfectly honest with you, I don't care what weekday of the week it is. If he wants to come in and roll, he can roll. And hopefully we get a few more players in play so we can talk about it every day of the week rather than just one day a week.
That's true. You're agnostic to what day that it goes up. Me, from a branding perspective, I like Super Tuesday. I can kind of get behind that. Obviously, it has other implications as well, which is always fun. But good to see this 1x2. He continues to play out here for size in spikes. Speaking of size, we saw some size this week out here in VIX options land. Kind of a crazy week, as you would expect with all the topsy-turvy action in the indices. You're going to see a little bit of tumult, a little bit of volume, a little bit of paper in the broad volatility products as well. Today, pretty active as well. About 330,000 contracts are on the tape coming into showtime. Yesterday, 732,000. Wednesday was a big day of the week. Almost a million, not quite a million. 984,000. I haven't seen VIX break really threaten that million level too many times this year. So that's kind of an interesting indicator in and of itself. Next time I get Mr. Rhodes in studio, he's the keeper of all the historical data. I'll have to ask him if that's an indicator he watches, or I'll have to make him start tracking it. The number of times VIX options volume gets at or around a million is interesting. Tuesday, close to it as well, 823,000. Monday, 533,000. All that leading into the ADV continuing to shoot up. It was threatening to break 400,000 to the downside not too long ago, a couple of weeks ago. And here we are now up to almost 700,000 on the ADV. That's up 39,000 just from last week. So again, it takes a lot of paper to budge that needle. And we have been seeing that out there. In terms of what's lighting up the tape out here, let's go to the top positions. And number 10 out here, 170,000 of the SEP 20s. So I'm looking really quickly. Yeah, once again, speaking to what we were talking about earlier, I think we'll get into that in a minute after we finish this. But this does also reinforce what we're just talking about. Maybe a little bit something structurally different going on out there in the VIX option space, because nary a put to be found in this top 10. Number 10, like I said, the SEP 20s. Number 9, 179,000 of the AUG 25s. Number 8, the SEP 30s for 180,000. Number 7, the AUG 28s, 187,000 of those. Number 6, SEP 24s, 208,000 on the tape. Number 5, now breaking into the top 5, AUG 26s, 209,000. Number 4, the SEP 23s, 223,000. Number 3 here, the AUG 19s, the comparatively reasonable compared to everything else here. The AUG 19s, 257,000. Numero dos here, the SEP 25s, 280,000 contracts on the tape. Number 1, actually kind of light, given the fact that, we had so much paper this week, but there's obviously reasons for that. 325,000 of the AUG 20. So again, all calls all the time. Total OI about 10.8 million, about 7.8 million on the calls, and about 3 million on the puts. But Simon, this kind of reinforces what you were talking about. And actually, Shelly, you were kind of talking about this earlier this week. We were kind of discussing this article. A lot of people actually sent to us as well during the week. A lot of listeners coming out of Bloomberg talking about our old friend 50 Cent. And Nomura was coming out talking to Bloomberg saying 50 Cent or whoever is playing in his wake, in his shadow. I was talking with someone recently about this, and they were saying the actual 50 Cent person is no longer at that firm anymore. I guess there were some issues with how that position played out over there, and so he's no longer there. So it's not the same guy, at least at the same bank. Could be the same guy at a different bank, but I don't think that's the case. Someone else maybe inspired by that paper, but either way, 50 Cent starting to perhaps send some shockwaves through the VIX space. And we used to see this in SPX when we were out there. Sometimes customers would gobble up all the upside, and you'd have what effectively you start to have rallies, you start to get to these short strikes, and all of a sudden you have what effectively are upside crashes. The market continues to rally through strikes that the entire pit is short. It's going to cause some issues, and people are scrambling and bidding to get some of this vol back that they are short. Nomura saying something similar happening out there in the VIX pit, saying 50 Cent, whoever is out there masquerading as him, trading as him, is gobbling up strikes in that 20 to 24 range, as they term it, massive size. In this article, he says this has gotten the street beyond capacity, whereas the traders and dealers are getting short this upside, so they have to scramble, buy all sorts of synthetics to kind of hedge this. As a result, they're saying we're seeing what they term an elevated gamma imbalance, tilted towards the calls, large concentration around the 20 strikes. Therefore, they're actually looking at this as being a reverse pinning. Remember, if the entire pit is short gamma at that level, they're going to bounce it away a little bit, and that's what he's referring to here. He says a lot of this volume is going to maybe repel the VIX futures away from the 20 strike, either to the downside or indeed to the upside. So interesting stuff. We've been talking about a lot of this paper filtering in this week. This is an interesting talking point, though. Mr. Meatball, this is an interesting one. Are you buying what Nomura is selling here? Or we're in upside crash territory, maybe in VIX options land here?
No, because there just isn't the underlying futures positions to push that around. And frankly, open interest on the upside is not that big. I think that I get what they're trying to say, but I don't see any strikes here that are particularly out of whack with how much open interest is there. And there's not nearly the same amount of short, kind of XIV, SVXY short to push things higher. So I just don't I don't buy it.
Simon, you were just talking about this. Sounds like maybe you are a little bit of a buyer of this effect. What do you think about this article and about the impact they're citing of this, effectively this reverse gamma effect on the 20 strike?
Well, I don't profess to know more than Mr. Meatball.
But that's a lie.
Well, as I mentioned earlier, I think it's certainly at least been a topic of conversation, right? So, the guy at Nomura, he's very, very sort of well followed, and people like what he has to say, which is good. But we'd heard this probably a week and a half, 2 weeks ago. I remember being called by someone saying, "Have you, got any idea where this is coming from?" Someone thought maybe, was it potentially an unwind of a DB, trades, because they're unwinding their portfolio, maybe. Who knows? But I just think that give the confluence of having some action in the high strikes is unusual for us over the last couple of years. Let's face it, there hasn't really been a lot of excitement, and coupled with this, daily shenanigans with trade wars, on and then off, and then the inversion of the yield curve. I just think that the market's primed. So I think it will take less for it to sort of stay elevated, or it will go even higher from here, just because people are more sort of on edge a little bit at the moment. And so I think that plays into it. As to whether or not this makes a material impact, I'm probably with Meatball in terms of it doesn't seem to be some massive overhang of short strikes up top. So, but I think we will stay more volatile than we have been historically, certainly over the past year and a half.
All right, so we got a kind of a somewhat firm no. We got kind of a middle ground. Shelly, you get to be our tiebreaker here. I know this one kind of came across your radar as well. Are you buying what Nomura is selling here, that we're in this gamma imbalance to the upside, or do you think maybe we're missing some of the other key components in terms of what's going on in the futures and things to really reinforce that?
I'm not close enough to the trading to have a strong opinion, but certainly given the volatility we've seen in these moves, that would make sense that there's people chasing the short gamma.
Well, and Mark, let's not forget that this has to be interrelated to what's going on in the SPX. And I have a hard time believing that there's some confluence of VIX and we're in real danger when we're down close to over 100 points and the VIX can't break 25. I think that in of itself kind of kills that narrative, doesn't it? Like, we're down 107 points and the VIX is like, it's fine, we'll live. And I think that's because you can't just look at VIX options on their own. You have to look at VXX, you have to look at SPX, you have to look at all the index options that are all tied together. and go from there. You can't just kind of look at these things in a vacuum. And again, let's go back to the fact that all the short interest in VXX and notably XIV and SVXY is basically gone. So you just don't have that end of day gamma to really push things around the way that, that these upsides. I'll tell you, 2 years ago, when XIV was still in business, I think that this No More article rings a lot more true than now that there's really no way to go long, short vol via ETP.
Yeah, I think that does change the landscape. And I'm kind of with you to a degree. When I first started seeing this article, because I've been kind of curious about that myself of late, but I didn't think the paper was there enough yet to really make the impact that they're claiming. So I started looking at SPX a little bit, 'cause that's where you have to go, right? You can't, like you said, nothing lives in a vacuum. It all has context in the volatility space, and everything has to have other layers of context wrapped around it to really make sense of it. So I immediately go to the SPX. That's where I kind of cut my teeth. That's kind of where I hail from to see kind of, I know what it takes to really get things rolling out there and to really make this type of scenario play out. And you're not really seeing that kind of paper. You're right, not seeing it in the VIX futures as well. So I mean, VIX options in and of itself in a vacuum, maybe you can make that argument. The other tail ends, you're right, I'm not seeing. So I don't see that. But I think Simon has a point too, where maybe we are primed. So maybe we're not there yet, but maybe we are kind of primed to maybe get there. If it's not now, when, right? If not with all this setup here, what is it going to take? But we're not seeing the ancillary legs that you think you would see if as they say in this article, I don't want to misquote them what their exact terms are, but something along the lines of the entire street is, the street beyond capacity. And so everyone's scrambling to go out and buy, as they term it, all sorts of crash protection due to their synthetic positions. I don't know if I'm seeing the degree of severity that this Nomura analyst Charlie McGillicuddy is claiming here. Interesting point. I think it's worth noting. Let us know what you think, listeners, about this, because it is an interesting point. But there's so many more moving parts to this now than just the VIX side. And you usually need to see this reflected in other areas. We could keep going on this, but we got to keep rolling on some of the other paper we actually saw this week. Today, a pretty big day here. It looks like a lot of size. On the AUG side, the AUG 23 has gone up over 100,000 times today, including a big block of 52,676, going up for 54 cents, a penny below the bid. So someone wanted to get these done. Then we saw another block of 13,000 going up at 9,000, again, a total of over 100,000. Also worth noting, about 35,000 of the SEP 23 calls going up today. So maybe taking some of these AUGs off the tape a little bit today. They got a little bit of a pop. They want to get it off. And then maybe reestablishing some, but clearly on a ratio. Could be also due to the price. The SEPs are about roughly 3x what the AUGs are right now. So some of that obviously maybe doing the premium. So maybe not wanting to dip in to establish the same size position. So you got about 100,000 AUG 23 calls going up, roughly a third of that, 35,000 or so SEP calls going up on that same strike today. Those are the big prints today. Yesterday, the big prints were the AUG 26 has gone up 166,000 times, including 28,000 going up for 64 cents, a bit off the bid. That went up actually as a spread against the SEP 23. So this was actually listed as a spread today, I believe. No, today it was a spread as well. So that spread's kind of been going up for for a little bit of a while here. Everyone wants to take off their AUG upside and reestablish it in SEP. Doing it yesterday, 166,000 by 52,000 times. So keeping roughly that 3-to-1 ratio intact there. Going out to Wednesday, the big trade, 53,000 of the SEP 15 puts going up on Wednesday. Also saw a SEP vertical going up for some decent size, about 27,000 times. A SEP 35 vertical going up for 31 cents. Looks like paper probably buying that one as well. Tuesday, the big trade. Again, there's so much paper going up. We're kind of just parsing some of the big ones, but there's a lot to dig into here, listeners. We could spend a whole show probably on each of these days, but Tuesday, the narrative seemed like it was a return of the 1x2. We saw the SEP 25-30 1x2 going up for pretty decent size, about 15,000 times by about 30,000 times. Looks like they did it for about a dime. Again, looks like paper probably buying that, but it's hard to tell. The execution was kind of tight on that one. So in that case, it could be closing. It could be taking off a short 1x2 that they had on before, which wouldn't be surprising. We saw a lot of short 1x2s going up over the last few months. So taking a couple off wouldn't be the craziest thing out there. And on Monday, kind of the quiet day of the week out there, the big prints were going on. Looks like a funky spread. D's 42.5, 80 vertical going up against the AUG 37.5 call. So maybe someone closing out the AUGs for 18 cents and then rolling into a D's nearly 40 handle vertical and doing that one for 26 cents. So maybe doing the whole thing for a net 8 cents, either debit or credit, depending on how they're doing. Looks like they're probably selling it. So, this is an interesting one here. It went up as a spread. So it's certainly one of the stranger ones. I guess they wanted to get some upside and they wanted to really cap it. But then again, you could probably make an argument. Why are you selling that 80s? Maybe because you get 8 cents for it. But either way, but a bit of a weird choice there. That went up a couple of times, actually. Went up almost 15,000 times and again 10,000 times. So about 25,000 times on Monday. But a lot of weird paper. Mr. Meatball, we're just talking about all the crazy upside paper that maybe has been messing with the VIX and with the term structure and everything else out here a little bit. What's been catching your eye in this just sea of VIX options paper this week, sir?
Yeah, it's been busy. So today, the biggest trade looks like a close and roll. Customer bought 90,000 of the AUG 23 calls for 54 and sold 35,000 of the SEP 23 calls at 146. Seen a few of those types of trades. There's been a lot of closing August to buy SEP. Yesterday they bought the 90. They bought the AUG 26s, sold the SEP 23s. They did some, did that 70,000 by 25,000 and 90,000 by 25,000 respectively. So lots of kind of upside call buying or call selling and rolling, and just a lot of it's been interesting. Some straddle sellers. So there's been a lot of vol guys dipping their toe, selling vol, but that has not worked in their favor so far.
Yeah, that old play of just fading it, right, hasn't exactly worked out according to script this time. Simon, I know you're out there in T3. You're not just creating indices, but you're doing a lot of that. But you're also out there watching the vol space, maybe trading a little bit every now and then too. What's been catching your eye in all this sea of VIX options paper this week, sir? Anything lighting up your tape?
Well, not specifically. I mean, we manage. We have a separate business that sort of manages funds for clients for trading VIX. So it's more sort of formulaic. They have something specific they want to do. So it's not like I don't have the same sort of exposure that Meatball does in terms of the minute-to-minute stuff and what's going on. All I know is that it seems to me that this is the first time in a long time that I can feel actually there's some nervousness about it. Because for so long now we've had this backdrop of QE and sort of central banks all stepping in to keep things calm. And I don't know. It seems to me we're on the shoulder or the cusp, if you like, of the end of summer, and October tends to be the most volatile year for VIX trading. It just is, and so I don't think this year will be any different. So, to be honest, I think I'm quite looking forward to it. When markets are volatile, it creates opportunity for people. So, bring it on.
Yeah, people tend to like to trade volatility products in those environments too. Go figure. So probably a double win for you guys over there. I can certainly see that argument. If that's the case, we'll have to bring you back on more frequently than once every 2 or 3 months, because it sounds like there's going to be a lot popping off just in the near future. Speaking of things popping off, there were some things happening out there, and one of the other volatility products you guys love to trade, or maybe less so these days, given by some of your voicemail. We'll get to that in a little bit. But VXX right now at about a 28.5 coming into showtime. Puts it up not quite 2 points and pretty close from where it was last show. Broke the 30 handle several times this week. That's a level a lot of people like to watch out there. Today coming into showtime, we saw about 181,000 contracts on the tape. That's fairly robust. Not blowing the doors off, but pretty robust given the ADV is up now to about 270,000 from up about 20,000 from where it was last week. A little bit of pretty much all downside except for one out here in the top 10. We'll hit them off really quickly. Number 10, the first and only call on the list here for VXX, AUG 28 calls. The rest, all puts, listeners. You got number 9, AUG 26 puts, 26,000. Number 8, AUG 23 puts, about 29,000. The Jan 14 puts, first Jan on the list, about 29,000 and change there as well for number 7. Number 6, SEP 18 puts, 29,000. Number 5, and SEP 19 puts, 30,000. Number 4, AUG 20 puts, about 35,000 there. And then we jump up a bit to number 3, the AUG 19 half puts, 44,500. Number 2, the SEP 20s, 45,000. The number 1 position in VXX right now, the SEP 17 puts. Pretty far out there. SEP 17 puts. Not looking too good right now, but again, got some time till SEP. 53,000 of those bad boys open. Total almost 2 million, about 1.9 million contracts open, about 900,000 on the calls, and about 1 million on the puts. So puts outpacing the calls for the first time in a little while. The big print today looks like about 5,000 of the AUG 29s going up, lifting the offer for 11 cents out there. But that's, it could be closing. We don't know. The OI is pretty sizable on that strike here earlier this week for this one. But going forward here, we got Wednesday. Actually, the big print was on Wednesday. Was no 56s going up 11,000 times for about a buck and change, just below the bid. They were bid 109. And that's also, we saw, looks like some SEP 22 puts going up for 28 cents, 10,000 times over on the old Miax Pearl on the bid there. So maybe a no 56 SEP 22 spread. Either way, weird stuff. Mr. Meatball, I'm sure your audience, they love to hang their hat on VXX. I know the Rock Lobster, he likes to write his newsletter about it all the time. So what do you and your audience, what do they make of this week, this interesting movement we've seen out here in VXX?
I mean, it makes sense, right? Because we've been backward all week. So, VXX is kind of a peg to a 30-day future. And, we've been seeing August roll off, and it's becoming more and more September, which is relatively stable here. And, it's been interesting. It's been really firm. Does not seem to want to give up much. And, like yesterday, VIX was down, but VXX was actually still up on the day. And it just goes to show you that there is an underlying bid for VIX futures, and they're only letting volatility go so far.
Yeah, maybe some of that reflecting what we were talking about earlier. a little bit of a sea change out here in terms of people's sentiments right now. Speaking of sentiment, earnings season seems like it's kind of gotten dwarfed by all the crazy macro currents. But earnings season, big names still popping off this week. We had Macy's, we had Cisco, we had Walmart, JCPenney, Alibaba, AMAT, NVIDIA, a bunch of big names still popping off this week. So John Deere was today before the bell. So a lot of names to watch out here. If you want the earnings reports, we got them for you, courtesy of our buddy, Mr. Matt Amberson and his team over there at ORATS, putting out all these great free earnings move results reports for you. Head on over to theoptionsinsider.com. Click on that options news and articles tab. The top right there, you can find all the earnings moves there. We got some earnings move results here for Walmart and well as a few others. Walmart came pretty much in line, which is kind of interesting. They were pricing in about 5%. They delivered about 4.8%. In the immediate, again, this is in the immediate aftermath of the announcement list. It doesn't take into account the days and sessions that follow. So in the immediate aftermath of the announcement, Walmart pretty much unched, at least from a straddle move, not unched, but in line with what people were pricing. And you want to see the rest of them, theoptionsinsider.com, including a cool earnings, they carried this new earnings season report. So you can see how the season is shaping up here. And coming into week 5, we're seeing big discrepancies in the actual moves versus what was priced in, what was implied. So maybe you want to check that out. Interesting nuggets there. All this great data, and it's all free. So head on over, check it out before they come to their senses and start charging you big bucks. Of course, you can't get the premium version, but still. Interesting stuff for you guys to sink your teeth into. Also some earnings and unusual activity stuff coming from them. So a lot of hot stuff. Speaking of hot stuff, you guys got a lot of hot takes. Let's see if we can get to some of them with some of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or Facebook.com/The Options Insider.
All right, everybody, let's do it. You guys have a lot of questions about a lot of different things. And go figure. It's a crazy week. You have some questions. I get it. So let's kick it off here. We got a bunch along this line. We'll just group a couple together that are kind of thematic. First, we've got a comment from Hatime. Maybe Hat Time. I like Hat Time better. We're going to go with Hat Time. Hat Time wants to know, or says, I should say, $6 for a Jan at the money put in VXX? I don't think so. And then APROPOSS0, good handles this week. APROPOSS0 says, I love the show. Well, thank you. He says, I checked out the VXX downside after your recent episodes. Darn, I'll use the family-friendly version of this. Darn, that stuff is expensive. How can you make money buying that stuff? Well, I think we've laid out a lot of different ways over the show here. It's not just straight up buying. You can go out and buy at-the-money Jan puts if you do indeed so desire, but as you've mentioned, things have been moving around quite a bit. I think the implied vol was somewhere around an 80% in VXX these days, even out to those Jan contracts out there. So it's fairly meaty. Go figure. Things are moving. VXX is going to move. Things are going to get a little bit juicy out there. Mr. Meatball, are your crazies in your pitch chat making similar complaints? Are they avoiding it? What are they doing to dodge the premium that Hat Time and APROPOSS0 find so onerous?
Listen, the reason why the premium is expensive is because it's worth it. That's the old one of the old sayings, right? Things are expensive because they're worth it. If we're moving around $50 a day or whatever, then maybe it's cheap. And actually, when the VIX is high, Simon can attest to this. That's when it tends to actually be its most underpriced, not when it's low. So I think you need to maybe reset your thinking.
You say $6 for at the money put in Jan is cheap. Go buy it right now. Post haste.
Well, I'm not. You get what I mean, right? There's a reason it's expensive.
I'm giving you a hard time because it's fun. Simon, do you concur with that out here? People obviously not liking the premium levels they're seeing in VXX, but as Meatball points out, there is indeed a reason for that, sir.
Oh, yeah, he is spot on. I think maybe this is a case of a bit of sticker shock. We've had such low premium prices for so long that people aren't used to seeing it this high. But as he said, it's high for a reason, and just because it's high does not equate to being expensive.
All right, we got questions here about alternate indexes and measures for vol as well. This one comes from Allison. She wants to know, what do you guys think of the MOVE index as a measure of volatility? If you're not familiar with the MOVE index, listeners, it was created by Merrill Lynch, and it pretty much measures implied OTC options on the Treasury. So going out across the yield curve, 2 years, 5 years, 10 years, and 30 years on the Treasury. So kind of, I guess you can make the analogy of a bit of an OTC Treasury, a VIX / spikes. Obviously not the same methodology, but it's in that same family. Worth noting, maybe this is why she's asking it, but MOVE making some headlines this week because it was just acquired. It was just bought by ICE. ICE gobbling up everything out there, and the ICE gobbled up the MOVE index just a couple of weeks ago, actually. So they obviously looking to get more active in the OTC and perhaps listed vol of treasuries. So this is interesting. We got the Spikes father on right now. Who better to ask? Simon, you've created a few vol indices in your day. What do you think of the MOVE and maybe its methodology of using OTC treasury options to construct effectively a Spikes or a VIX for treasuries?
Yeah, it's a good question. So the MOVE index has been around for a long time. So it was developed by a guy called Harley Bassman whilst he was at Bank of America. And so it's well known, and so I understand why the ICE wanted to buy it. It's a fairly high-profile sort of index. However, as you mentioned, you use the word it's based on treasury options. Now, the problem there is that 20-plus years ago, the treasury market was where the volatility trading was at, if you like, in the fixed income space. These days, they barely trade, right? So the underlying bonds themselves don't trade. So you have this issue of, well, how relevant is it? How tight are the bid-offer spreads and so on? How deep is the underlying market? Because the focus these days has moved more to other areas, either trading TY on CME or you can do it by trading swaptions in the OTC space. So in order for this to resonate with anybody, they have to make some changes as far as I'm concerned. But yeah, I mean, look, it's a high profile sort of asset that they've bought, and so I think there's logic behind it.
Yeah, whenever I see these things constructed in this way, sometimes with OTC, you're right, that your first question comes to mind is, what is the liquidity? What is the availability of its underlying quotes that they're disseminating this on? Is that going to cause all sorts of crazy gaps because it's not on this listed thing that trades very frequently? So that's always an issue. Mr. Meatball, you like to talk a little bit of bond vol every now and then. Do you ever throw the move into your analysis, sir?
I don't. I'm generally just looking at the treasury options that trade on the CME or TLT, things like that. So it's not one that I've been paying a lot of attention to, but they have seen a pretty significant increase in volatility on bond options as they should.
Since we're talking bonds really quickly, we got a couple minutes before we can get into crystal balls. I'll give you a couple of minutes for your rates diatribe.
Yeah, all right. So I want to talk about the yield curve inversion that we're all is all national news. And based on the way people are talking about it, it's clear that people don't have any, and I mean any historical context for what normally drives a yield curve inversion. And, if you look at the biggest yield curve inversions, in fact, all of the ones prior to this one, what is different about this yield curve inversion versus the previous few yield curve inversions? It's the fact that in all of the other 10 environments, interest rates were going up, not down. And that is what was driving that yield inversion. So we're in an environment where we're inverting and yields are falling. That is not the way a yield curve inversion normally works. This is nothing like the other 10 that we've seen. And it is entirely different and driven 100% by the fact that you've got central bank buying. The last time we were inverted, the 10-year was north of 6%. Now, it's 1.5% and falling. This is not the same thing. This is, and people will say, "Oh, so this time it's different." Yeah, you know what? This time it's actually different. Never, ever has an inversion took place under these circumstances. And couple you got, Shelly, you've got a little more experience than I, but tell me if I'm telling a tale outside of school.
You're telling tales, sir.
That's an interesting point that no one's talked about. And I'm sitting here listening to you and saying, boy, why were we down 800 points the other day?
It's freaking stupid. And, yeah, nobody talks about this because nobody has any historical reference as to what actually higher interest rates and a yield curve inversion look like. 80% of the street that's actually trading was in high school when in 2007 or younger and have no idea what any of this actually looks like.
Uh-oh, old man Meatball getting on his soapbox. I like it. But you have a point. You're right. This is a different environment, and of course even though we are in a cutting rates environment, the Fed doesn't really have as many bullets as it typically does when it starts these types of environment. Usually they start cutting, into the recession. They have a lot of way to go. Rates already pretty low, so that makes it unique from that perspective as well. They can't really cut ad nauseum the way they have in the past to try to mitigate some of these impacts. So it is a bit of a unique time. I want to weigh in on it more, but we got to keep on rolling into our final segment. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, another week, another challenging one for the Vol Views Crystal Ball crew. Last week, actually, we had a decent one. It was kind of I believe it was a bit of a tie. People took umbrage on both sides. Mr. Meatball thought he won, and Mr. Dr. VIX, a.k.a. Mr. Rhodes, thought he won. And there was umbrage taken on both sides. I believe our buddy, Mr. Steve Sears over there, Barron's guy, weighed in as well. So a lot of contentious views on who won the crystal ball from last week. But it was pretty much equidistant on both sides. Again, because we're looking at spikes and VIX cash, you can kind of interpret it several different ways. Coming into the end of the show here, spoiler alert, listeners, there are no winners, unfortunately, this week. It'll be an easy one to adjudicate this week. VIX cash at about a 19.15, closing on 19 and a quarter, and we're seeing spikes at about a 19.80. So staying firm, staying lofty, staying I believe he put it, pregnant with the dividend. I just wanted an excuse to say that again. Throughout the entirety of the show. So pretty much everyone was at about 3 handles off. I was actually the closest. I was feeling the least erosion of the bunch. I was at 16.75. Then we had our buddy, the Flowmaster, next closest. He was at 16 and a quarter. And the Meatball, oddly precise last week, and unfortunately oddly far away at 15.13. But none of us were within the required 1 point parameter on either Spikes or VIX to really count it as a victory. So that means the table is wide open this week. And since you're our guest, Mr. Simon, I won't even make you go first. I will give you the pride of place of choosing what you want to do. Do you want to pick first, or do you want to pick someone else to go first?
Oh, no, I'll pick first. I
like that. A man who stands behind his conviction, not afraid to go first. I like that, sir.
I'm going to say 17 and a third.
17 and a third. I like that. And since we've kind of made our lives a little bit easier, we're applying. We used to try to do both with Spikes and VIX Cash. That made our lives too hard because, as we just talked about, the evolution of the premium. One's over 1 week, one's the next. So we're making one prediction now that we can apply to both. It actually gives us a little bit of wiggle room now because you can say, hey, I actually meant it for Spikes as opposed to VIX or vice versa, depending on which one you're closer to. So that opens up the door to all sorts of arguments, but it makes our lives a little bit easier. So 17 and a third for Mr. Simon. Since I was the closest last week, I shall go next with Mr. Meatball hanging out there with his 15.13 again for this week. Let's see if he picks that again this week. But yeah, so here we are about, as I said, about close to about 19 and a quarter, close to on the VIX Cash, and about 1980 on Spikes land. So feeling frothy, feeling thick. Mr. Simon feeling some erosion, but not as much as last week. I gotta say, I'm not feeling where I was last week either. 16.75 does seem like a bridge too far in this, shall we say, more excitable environment where one or two more shoes can drop and we're right back up there again. So I'm going to lean to higher from where I was last week as well. I'm actually going to go a wee bit north of that, actually. I'm going to say a nice 18.5 for this time next week. So a nice round 18.5 there for both Spikes and VIX Cash. All right, Mr. Meatball, I bought you some time. What are you feeling for next week, sir?
I was literally about to guess 18.5. You jerk.
That's why I go second. See? You gotta win. You gotta win to go second.
So I've got what? I've got 17 and a third.
17 and a third and 18.5.
And 18.5. All right. Well, I think we're going to see another trip to 22 or 23 next week before we really back off. And I'm going to say 16.75. So I'm taking yours from the previous week. Jerk squad.
Look at you. Swapping. Jerk squad. Someone's been hanging out with some 9 and 10-year-olds out there. I like it. All right, so that's our gamut this week, listeners. We got 16.75 to the downside with the Meatball. Mr. Simon, kind of the Goldilocks in between there, 17.33. Me playing the Russell Rhodes role this week of buying the upside, at least compared to everybody else. Not in the market. That's still downside, obviously. But going in at a nice, solid, firm, feel it, listeners, 18.5. All right, unfortunately, that music means we've come to the end of this epic sojourn. What an epic one it was this week. We talked crazy upside gamma imbalances in VIX. We talked the differing levels, why that is. Spikes, pregnant with the dividend, or SPY, my new favorite term out there. What drives those differences with the big roll in spikes, the crazy size prints in VIX options, crazy disputes and arguments about premium and VXX. All of that and more on the show today. It was a good one. Hopefully you enjoyed it. Let's go back around the horn, though, before we go. Let's start with our buddy, Mr. Shelly. Shelly, I'm guessing you're kind of busy out there these days. You got a bunch of different exchanges popping off. You got Spikes. And then, of course, you got things actually trading in the market. So the market's not obliging you and giving you quiet time to get all your stuff done. But what's on your radar? What's coming up from you guys in the coming weeks, sir?
The big thing for us is we're still looking to launch the Spikes Futures next month at MJAX. That's what we're spending a lot of our time on and what we're most excited about right now.
And we're still on track for September, then? That's still the plan?
We're still on track for sometime in September. We also filed a rule this week with the SEC, and it was posted on their website this week, to allow hedging with combos in Spikes against Spikes Delta positions at up to an 8-to-1 ratio.
Oh, there you go. So if you're on the institutional side, listeners, you want to hedge with some combos, that might be of interest to you. Mr. Simon, you've teased us. You mentioned it again today. You teased us with the Viking. When are we going to see this bad boy actually live so we can sink our teeth into it, sir, here on the show?
Well, you know me. I wanted yesterday, but we have to work through the process properly, and so hopefully not too long. I mean, matter of weeks, not months.
Proper processes be darned here on the show. We just want our index so we could talk about it here. So hopefully soon. And listeners want to catch up with what you're working on, sir, and all the new stuff you have cooking. You got some stuff in the crypto space. You got a bunch of stuff up your sleeve. They want to check out the latest. Where should they go? What should they do, Simon?
Do you want to see stuff from us, like the Crypto Vol Index, for example? T3index.com.
I got to imagine that Crypto Vol Index kind of interesting to watch of late. Just a little bit happening in the crypto space of late. And last but not least, Mr. Meatball, sir, people want to write to you. They want some mentoring. Maybe they want to check a webinar. They're upset with these VXX premiums. They want to learn how they should hedge themselves in this market. A lot of questions floating around out there these days. I got to imagine these are boom times for you. But if you got time and they want to reach out to you, where should they go? What should they do?
Just email me, marketoptionpit.com, and I'll be happy to help you out. If you want to see, I wrote up a VIX piece for Kramer this week, and you can go to optionpit.com/Kramer from Mad Money and Kramer, and you can check out the video. You can see my last webinar and take advantage of an offer we have on there.
There you go, optionpit.com. Kick the tires and light the fires, as they like to say. So all you guys who have these questions about VXX premiums and everything, optionpit.com, good place to go to get those questions answered. Join the pit crazes over there. I say that with love. I met a lot of them. Nice people, but they're crazy when it comes to vol, which is what we like about them. They're hardcore, which is what we like. So are you out there, because we know we love you. That's why you tune in every week. I want to thank all of you out there for downloading, streaming, subscribing, for sending in such many and varied questions. Keep them coming. And we'll see you back here on Monday, of course, for the option block and all that good stuff. It all kicks off again. And then back here again on Friday for a little more volatility views.
Volatility Views is brought to you by Miax, one of the fastest options platforms in the world. Miax is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.